Hey guys, I want to share with you 5 stocks that have some insane growth behind them. And if you're a long-term mindset investor, I believe these are the type of companies you want to be looking for, ones with massive growth behind them. And over the long run, these will just compound over time. Like this first stock right here, it's one we've all heard of before probably, but I didn't know that they were growing this crazy. Look at Duolingo. We've all probably heard of them before. They're like the language learning app. Look at their subscription revenue. This makes up 80% of their revenue. Look at the growth behind this. It's up 48% year over year. So at this growth rate, who knows what it's going to be this time next year. So Duolingo's growing their subscription revenue. Look at their advertising revenue. It's up 23% year over year. I mean, that's not much of their revenue, but the fact that, this company's growing at such a rapid rate. I mean, look at the orange line right there. That's kind of what the analysts are forecasting. They're expected to just keep on growing their revenue. If we look at their free cash flow, they crank out free cash flow. Geez, look at that, 50 million plus a quarter. And if we look at this company's net income, they're just now with net income positive. Look at that. They were kind of losing money before this, but now here's Duolingo actually cranking out net income, and they're also completely debt free. So Duolingo has zero debt. So that's kind of one of the first stocks I wanted to share with you. I think that one has the potential to keep on going up. If they can keep up that subscription growth rate, I mean, that is crazy impressive. Now, this next stock right here might be a little controversial because it's kind of like a meme stock right now, or there's so many retail investors getting into this name, but I can see why they're doing it. Check this out. They're actually down 11% on the day. This one's on my watch list, but if we just look at this company's space systems revenue, which is 80% of their revenue, look at the growth behind this. It's up 80% year over year. Like, this is what I look for in a company, like ones with massive growth behind them. And this is up 80% year over year. Usually if a company's growing their financials and the revenues like crazy, the stock price will follow that, good financials win over the long term. Well, you still got to be careful though. RocketLab, loses net income right now, but at this growth rate, as long as they can keep up the sales growth, I mean, it's all right if they lose money. And the balance sheet is all right. It's pretty decent. But yeah, that's RocketLab. This next stock I want to go over is actually one I own here in my Webull portfolio. So if we look at ticker symbol NET right here, this is CloudFlare. We actually own 22 shares of this company. It's one of our larger holdings. It's like $2,000. But anyway, this company is losing money right now. So check this out. This is another money-losing company. They're going to get net income positive real soon, though. They're losing less and less money. That's kind of the trend we want to see RocketLab go on, where they lose less money. But if we look at this company's top-line revenue growth, CloudFlare is in the cybersecurity industry, software industry. Look at this. It grows 30% every year, like it's up 28% year over year. It literally grows every quarter a ridiculous amount. So who knows what it'll be this time next year. And they're also cranking out free cash flow as well. And if we look at Cloudflare's actual numbers here, I'll show you their actual numbers. So they have $1.82 billion of cash. It's actually on the left here. So they have $1.82 billion of cash on hand. And let's see how much debt they have. So they have $1.3 billion of debt. So they have more cash than debt, which is a great sign. And if we go and look at their interest, look at the amount of interest they're making just on their cash. That's actually crazy. They made $21 million of interest on their cash. That's all, high margin for the company. You do got to be careful though, since they are in growth mode, they do have some stock-based comp, so their total common shares outstanding. You've been diluted 2% year over year. It's not that big of a deal. You lose 2% to stock-based comp, but that's all right. They're going to grow out of that. I might be a little biased on this one because I own them, but I really do love the growth rate of this company, and I think they'll be net income positive in the next 1 to 2 years. Remember, none of this is financial advice, but this next company right here, you've probably heard of before. I overlooked this one at first until I looked at their financials and saw how impressive they are. So just keep in mind this company has zero debt, so they're completely debt-free. And if we go to their top-line revenue growth, I mean, this is ridiculous. It's up 77% year over year. I mean, they're literally growing like a software stock or something. 77% growth, and look at their net income. They used to lose money every quarter. Well, here they are. Just in the most recent quarter, they made $75 million. And the PE ratio is just the net income, which is EPS per share, or, the net income per share. But if you go out and look at a forward PE ratio on HIMSS, they're trading at a pretty fair valuation, and they have a great balance sheet, zero debt. Like I said, I'll show you that. So right now they have $254 million of cash. So $250 million of cash. And like I said, zero debt right here. That's why it says zero. They have zero debt, and I'm guessing they're making interest as well. Yeah, look at that. They're making $2.5 million a quarter of interest, interest on their cash. So I really like this one. They are diluting you. You've been diluted 2.7% year over year. That's usually normal for these high growth names. Again, this one, they just went profitable. So maybe they'll in the future even do some buybacks or dividends because they're going to be cranking out net income. Hims is a cool play in the healthcare industry. They make the GLP-1. I don't really want to get into it because I don't know if that I'm allowed to talk about that on YouTube, but yeah, Hims is a great one. Oh, and check this out. If we look on the day here, oh, I'll just be quick with this. I'm not going over this one. Look at Super Microcomputer. I would never recommend to buy this one. They're so volatile, so risky, but they're up 30% on the day. And we got 10 shares in them at $26. This one's a swing trade. You know, I'm a buy and hold forever kind of investor, buy and hold for the long run, but Super Microcomputer is a swing trade, and we just sold out a little bit of them today. We took some profits. All right, guys, so this last stock right here, we've all heard of this one, but I want to show you their financials because you got to know how impressive they are because they might actually deserve this insane total return. But real quick, let me show you. This will make sure to hit the like button for me, man. I sold out of all my Palantir shares at $8 a share. At $8 a share, dude. So if I would have held those shares, I would have been up like 600%. So I don't really want to think about that. Anyway, I want to show you why Palantir is so great. And this one's on my watch list. Obviously, it's hard to buy them at all-time highs right now, but here's what's so impressive about Palantir. Check this out. Most of Palantir's revenue actually comes from the government. They have government contracts. And look at the government contract revenue. It's up 32% year over year. I mean, that's ridiculous growth. And also their commercial revenue, like with S&P 500 companies, this is up 26% year over year. So anyway, this is why Palantir is a pure growth name. If you look at their revenue, their sales are up 30% year over year. And look at their net income. This is what I love. You know, this is what CloudFlare will hopefully do soon. So CloudFlare is losing money every quarter. Look at this. Palantir was losing money every quarter. Well, here they are. Now they're cranking out net income. And who knows at this growth rate, who knows what the net income will be this time next year. And also, they have just a phenomenal balance sheet. Palantir has zero debt and $5 billion of cash. We can also look at some of their metrics right here. This app's called Mumu. Link in the description if you want to download it. Look at their net margin growth. Their net margin is 18% right now. EBITDA margin's growing. I mean, every metric, you know, is just going to look amazing here. They're growing their ROIC, their return on equity, you know, free cash flow to net income. So Palantir, again, great growth name. Yeah, it's hard to buy them at all-time highs, but that's kind of what I look for in a company. Like if we look at this stock right here, this is my largest holding in this portfolio. We bought this one 10 months ago. This is why financials always outshine in the long run. Usually is the reason why the stock goes up so much. Look at this company's net income. It's up 75% year over year. So they have some ridiculous net income growth. And same with their top line revenue. Their sales are up 31% year over year. So usually companies that are growing their sales and growing their net income at ridiculous rates, the stock price usually just keeps on going up. And here's the funny thing about this company. Here's why I would not sell it right now, even though I'm up 250%. Here's why I wouldn't sell them. If you look in the PE ratio in the top middle, right now they're trading at 22 times earnings, which isn't even like ridiculously expensive like that. It's almost like undervalued even. So yeah, those were the 5 stocks I wanted to share with you. Hopefully you found some value in this video. What sucks is a lot of those stocks are at all-time highs right now, but that's because they're such quality companies. They're keeping up with the S&P 500, where the S&P 500 is literally at an all-time high today. So maybe add them to your watch list and wait a little bit before you buy into them. But if you found any value in this video, don't forget to drop a like on the video and subscribe if you're new. Also, I go live on TikTok every day, twice a day. The streams are always really fun. So if you want to subscribe to my TikTok, check that out, and I'll see you on the next video.